Well, all right. Pretty uneventful day after the open. Well, actually, after the open, we ended up with what 11 to the good, including CMA, AJG, EVR, MDC. I'm sorry, MPC twice, LNC, EOD, BSTZ, CINF, CMP, and HSY, otherwise known as Hershey. I just got off the bike. I'm a little winded. What are we looking at now? Let's see what we did on the day. Yeah. Another 70 in trading for the day. Still got all our dividends coming in, 31. We've had 3 days of no dividend pays. We've actually had profit every trading day. You scale this up, the larger size accounts, and you'll be on a higher scale, higher amount of your max shares. But trying to drink water, everything at the same time. But yeah, don't do a workout just before you're supposed to go on live, because you can't get your thoughts straight. Where are we at here? Yeah, it's a good day overall. We like that. We're probably not going to hit what we did last month, 1637. We had some flat areas in here. You can tell, well, these flat areas here are your weekends, but what I'm saying is you didn't see that big spike. Though we still have 1 day to go, we don't know what the dividends are going to be. We can go look them up after after hours, but we ain't going to worry about that. We'll see if we can trade out some more tomorrow. And when I say trade out, we already have everything established, so we're not worried about what the market does. If it goes up and we're out, then we're out. We're trying to stay as close to the mean, meaning in our world, in DCT world, our mean is our average price. It's not what some guru comes up with on his charting program, okay? We base everything off of what we've got in it. You got to start thinking in terms of what you have in it, not what somebody else has or where they're getting their numbers from. One size does not fit all. So too goes your account sizes. Don't think that, if you've got $100,000, you can be trading like a person with 2 million. It's quite a bit different. All right, what did we sell or buy? HP. Okay, so we add one more to that, HP. I'll have to throw that up on Twitter too. So another 3 1/4. We got 73.36 on the day. I hate doing that because eventually, I keep getting hit at the end of the day. I have to keep readjusting everything. Big pain in the ass, Counting money is a big pain in the ass. So 73.36. All right, so we're averaging 76.84 per day, and that's not including weekends, obviously, because there's no trading going on. But always remember, if you have something that even if you're sitting on it, you're making some kind of dividend amount. So when you're starting off small, this account right here is 31,000, right? And remember, this is a combination of 3 different accounts. But if we can get a minimum of 1% per month, right? Let's go back here and see what we're at right now. Right here, so 1536.74 divided by, I'd say, 120,000 combined, right? Multiply that by 100, right? That gives you 1.28%. Multiply that by 12 months. you can average that. You're making 15.37% per year. This is how Warren Buffett does it. It took us a long time to figure it out. Once I figured it out, I figured I'd share it with everybody. We'll see how many smart people catch on to this. I'm not going to promote this. I'll let the people with brains figure it out for themselves. I'm not going to tell people they're wrong for their investing style or anything else. I'm saying this is no risk or super low risk. If you look at what we've done over the years, we're sitting at 328 days right now without a loss. We took a loss back whenever it was, some type of merger or whatever, but we classify that as a loss. If we actually lose money, we will claim it. But, as it goes with options, you might be on the hook for $1,000 to make $200 or whatever, $500 to make $800, If it goes against you, what do? You close out of the position, you try to save your ass. Well, we're not interested in trying to save our ass here. What we're interested in doing is collecting dividends. We're not worried about the downside on the market, because if it goes down, we're going to continue to make dividends. We're just not going to make this amount here. You can say goodbye to the profits, right? Your trading profit. I'm not saying it's all going away. I'm saying it is going to be quite a bit lower when the market turns and goes down, but you'll continue to see a positive increase in your dividends. And to be honest with you, it actually goes up when the market is going down. Why? Because you're DCAing on the way down. People just don't get it. They're like, well, that company could go out of business. I was like, all right, do you think they're all going to go out of business at the same time? And $172 in this. Here's an example, Cody. I have no idea what they do. They pay money each month, or actually every quarter. I don't care what they make. As long as they're paying me and we have some volatility in the stock where it actually moves, I'm good with that. If a stock's not moving, I want to get paid quicker, right? We'll take a look at DX. DX, CEF, here's a monthly pair, right? It doesn't move much. Look, 19 to 20, right? Very slow mover, right? But we're interested. I want that full amount of dividend if I can get it before 6 months is out. I think we bought it back in here somewhere, right? It had to be on this line somewhere. So if we had to wait 6 months to get it before we got it in a year, we're ahead of the game. It's simple, right? So in the meantime, what are you doing? You're collecting monthly dividends. And what's the percentage here? 7.7. I'm listening to Guru this morning talking about buying Apple and holding it. I say, dude, it's 0.06%. Look, 7.7. It doesn't, the same value. So, well, it doesn't move. I don't care. You can't tell me it's going up. The best you can say is it's going to stay at that price, and we know that's not true. So it's either going to go up, it's going to go down. You can't tell me how high it's going to go. I'm in it for life. If I'm going to buy Apple, if it had 7.7 posted up there tomorrow, I'd buy Apple and I'd hold it for the rest of my life. Or at least until it gave me 7.7% return on my money. And then I'd reestablish another position. That's your occurrence. You don't just hold shit. Once you get up into the millions, the reason why Warren Buffett has to hold, it's not the only reason, but the reason he has to hold is he has so many shares, he can't get rid of them fast enough to make the profit that he wants to make it. So it's easier to just hold it and collect dividends. When you've got one stock that's paying you $150 million a quarter, what do you care what the price is? He says it all the time. Who cares what the price is? As long as you're getting something for holding it. If you're holding Apple, I'm sorry, but you need to think twice. There's very few in here. Look, 1.9, 2.2. I'm okay getting that type of return, but 0.06, that ain't shit. Banks give you that. Go put your money in the bank. It's safer there. You won't lose it. Apple, go ahead and buy right now. What if it goes down by half? I know what you're hoping for, a split. It's called hopium. Love that term, hopium. But anyways, the more times that you can make trades and pull money out of the market, you might think this is not a lot of money, but you start multiplying it by thousands of trades. And we all know that the trades are $1 and less. Interactive brokers, I pay $1 per side. Been with them for, what, 30 years? You can go, we have accounts across the board. TD Ameritrade, Tasty Trade, E-Trade, shit, you name it. Except for Robinhood. We don't deal with Robinhood. I don't have anything wrong. I don't have any problems with them. I just hadn't, opened an account. They're mostly mobile. I'm mostly on PC. I do trade off my phone, but it's rare because I'm close enough to my computer. It's a lot easier to look at stuff on the computer than just to mess around with a phone. I hate phones. Anyways, so let's go through here and see if we got anything else that's powering up that hasn't closed yet. EMN, pretty close. AIG, nah, not close. Bought that this morning. Is it AIT? No, ADI. ADI, where's ADI? Might not be on this account. I don't know, but look, you got a bunch that are down too, right? BBN. Monthly payer, do I care where it's at? No, I don't. I got 58 units, right? 58, multiply that per month. I keep getting that in. This is a small account. It's got 68,000 in it, okay? It's just one rental property that's bringing money in out of many. Okay? TLT, same thing. Monthly payer, I don't care what this price is. It's going to continue to pay. People are going to continue to buy this. This thing ain't going anywhere. If it does go somewhere, I'm going to lose $830. Do you think TLT is going to be around? Maybe. It's the 20-year Treasury bonds. If our government falls apart, then yeah, it goes away. Maybe. You got to start thinking positive. Stop thinking negative. Yeah, TRTN. You've had this one before quite a few times. Now, if you're new to this and you don't understand what's going on here, you can tell that this green line, right? You're going to say, well, that looks like Fibonacci. Well, you're partly right. I just use it to figure out in my 6-month chart where the low was and where my mean is. Not where the high is, where the mean is, where I bought it at, where I own the stock at, right? So you own 3 shares, big deal, right? So we were wrong. It could have went up and hit it. We could have profited. Now, how many times do we do that? Every week, okay? Every day this month we've taken profit, meaning we've had to hit more than one. So if this comes down, you see this 50% pullback. The alert's just there to let me know, so I don't have to look at this chart every friggin' minute like most people are doing, sitting in front of their computers or on their phone. Oh my God, what's going on? Know where your next buy is. If you don't know where you're buying it next, then what's the point? Who you listening to? What are you waiting for? It's like, it blows my mind the amount of misinformation, miseducation. Nobody knows how to manage money. I'm not an expert by any means. I don't have a degree in it. I have a degree in engineering. This is not rocket science. This is plus and minus. It's percentages. We're not using any fancy math here. But all I'm saying is, if you're willing to buy it at 56.87 and own it for life, then would you be willing to, buy another 3 shares at 46.36 and bring your dollar cost down half, so you'd be around the 52 mark? And you're still going to target that same amount on the amount of the dividends. You're doing the same thing. You're just moving the goalposts, right? So, and then Matter of fact, what's this one down here? 0. What would that mean? Think about it. Oh, and now we're going to try to bring it down here to 35 cents. Well, I don't want to wait 6 months to make $1 million. This is the type of mindset people have. They think that, you know, this shit's going to go up forever. Like, oh, that was a good pullback. Yeah. And, oh, that's going down. I wouldn't buy that. And I was like, well, that's because you're not making any money, because you're only buying it when it's going up. You got to have a plan there, people. I've been doing this long enough to realize that if you don't lose money, the only thing that can happen to your money is it grows. Then if you want to buy something, you pay cash for it. Get out of debt. Take some cash out of your cash account. You know, like this one's got, what do we got in? Excess liquidity. Okay, 16,700. So if I want to buy something, I can take it out of there. Yeah, I can go, oh, wait, let me go see my account over at TD Ameritrade. What I got in there? Oh, I got $58,000 in that one. Okay. Hey, you people need to think about what you're doing. Stop being afraid. Stop listening to the fear mongers. Stop listening to people that, you know, don't have your best interest at heart. I'll never tell you what to buy. I'm just trying to show you how to manage money. Simple way to do it. A couple of people that I show this to, or have shown it to, good friends of mine, I mean, they're ecstatic. They're just like, I cannot believe this. Cannot believe how easy this is. Well, I shouldn't say it's easy. It took one of them about 6 months, you know, to finally get it down. And I understand. I mean, I've been doing this a long time, but you have to get your head around this get rich quick crap. You know, it happens to some people. They get lucky. It's like, oh, hey, I pressed MMM and I really wanted MM and it split and it doubled and everything else. And I didn't know what happened. And all of a sudden I'm up like 5 times the amount that I invested in 1 week. I mean, you hear these stories and like all of a sudden this guy's some kind of god. And you're like, great, good on you, man. But if you could duplicate that, you'd keep on doing that. You can't. This is something, you watch this every day. You can go back 328 days. You can look at every one of our trades. Exactly what we do. We just keep pulling money out of the market. Right now we're on pace for 15%. So after tomorrow, we'll do something on the weekend. We'll put together another video on, you know, the smallest account that we have, right, that we manage. Where's it at? I think it's like 20. I know it's more than that now, but okay, so 19. Now it's up to 27,000. I think 4 months ago it might have been 20. So it's like up to $7,500. So you're like looking at it and saying, well, this thing's making 5.82% per year. That's the overall account, but we still have 11,668 sitting back, right? We have that sitting back so that we can buy more, but we also let the scans and money management determine what we're going to do in the market. We don't get greedy. If you let that greed get you, let me tell you, you'll make some stupid decisions. I did it in my early years. And I got smart. And just said, you know what? No FOMO. No YOLO plays. I do trade Bitcoin though. And people are like, well, that doesn't pay interest. And I was like, well, it sure as hell does to me. It pays me 10% every time I make a trade. You know, I don't go for, you know, this 7.7 or 4.8. I'm a flat 10%. I want 10%. Ethereum, you know, it's at 2,000. I'm going to make a minimum $200 every trade. I've traded that thing over 1,000 times. Not at 2,000 level, but, you know, down below. I'm just saying that it's like you got to understand how the occurrences are in your favor. Bitcoin and Ethereum, the volatility over there, if you're not involved in it, you need to look at it, and play it small. Like BTC, Bitcoin. Don't play it big. Don't, I mean, you got 50 grand, you'd be stupid just to buy one. I mean, you need, sure, if it goes up 5,000, then you make $5,000. Great. Can you guarantee it's going to go up 5,000? Well, if you listen to all the hypers out there, right, they're all like, yeah, it's going to 200 million. Are you going to wait for it to go to 200 million, or are you going to take advantage of the volatility and trade it? I've been in since 2013. So, of course, we're getting a push in oil, which was highly expected after the more economic, if you want to call it, data. I don't know. I don't trust anything that they say anymore, and I don't really care. The stocks basically tell you, if you're involved with them every day and you're diversified like we are, I mean, you can take any of these and look at them and say, what are they? Main Street Capital, MetLife, 3M, Marathon Petroleum, okay, Nuving Tax, National Healthcare. I don't even know what half of these are. I mean, I can look at the name. I can't tell you exactly what they do. Get a good idea where they're at. I have no idea what NHF is. I know it's a CEF, pays me monthly dividends. That's about all I know about it. But because I know it's paying me dividends, I'm in. If it stops paying me dividends, now see, this is a low payer right here. This is one that we just had never seen before. We're just like, man, whatever, 60 cents, pays 60 cents. It's 11 shares, big deal. So we got, what, $131 and it's paying us 5%. Whatever, If it makes the move up 60 cents, we're at. If it's not, then we sit there and we collect 60 cents a year for the rest of our life. That's 5% interest. If it just stays at this price. If it goes down, guess what happens to the interest rate? It rises. The price goes up, dividend yield comes down. So that's what we're targeting. 1260 is we're at, right? So look at the range in 6 months. It's what, a $3? You look at some of these others. They move $3 in one day. That thing hasn't moved $3 in 6 months. So you better get paid for it. But diversity, if it comes up on my scan, I'm more than happy to get it as long as it hits those criteria. And most people are just like, what did Kramer say to buy today? That kind of shit won't fly, people. You'll get, excuse the language, you'll get effed every time. These people are manipulators. Do for yourself. Think for yourself. Now, talking about 3M, there we go. We bought that this week. It was on the scan. It came way down. Like, it's down all the way to 88. What did we buy it at? 97. So it's already back up above what we paid for it, right? I have no idea where it's going. Doesn't matter. All we're trying to do is target that 595. We want that 595 before the year's out. Okay? If it doesn't happen, who cares? We get to collect that 595. Now you start putting your thinking caps on here. If it's 3%, right? You have one share, you're going to get $5.95. That's 3%. That's a pretty good return, even on a $200 stock. Now, if you're smart and you understand addition, if you had, this is for in an account under $100,000, right? As soon as you get over $100,000, you can start using 20% of the max shares. So if max shares were 10, now you can do 2, right? So now you just doubled it. Your percentage doesn't go up, but the amount of your dividend goes up. Make sense? For that same price. The price is constantly moving. Don't be fooled by dividend yields. And sure as hell, don't be fooled by these charts. These charts, my God, people live and die by these things. Everything to the left of this means absolutely nothing. We use it as a reference only to find our 50% mark. What was the lowest price in the last 6 months from the time that we bought it? That's what we want to know. Okay? 176.82 is where our second buy would be. We're not interested in anything else on this chart. All we know is we're going to sell it at 204.45 or we're going to buy another one at 176.82. That's it. That's all you got to remember. That's how simple this plan is. Okay? And when it comes down even further, if it comes down to 156.13, we buy it again. And then we start the cycle all over. But as we go through the next couple months, if this market does, turn around and come down, you'll be able to see this in action. And people are going to be looking for, like, oh shit, I wish I had got in. Because dollar cost averaging, yeah, sure. I'm going to be collecting these dividends on the way down. People are going to be sitting, waiting, wondering when to get in. So what are they doing? They're not losing money. I don't believe that. Like it's there for the taking, but you have to have some skin in the game to get it. So we've got a dividend deal or a dividend payment coming up here on May 20th, right? And if you wait long enough, let's say this price is back down to, what is it, 156.13. So we'd end up having 3 shares down here. Let's just say it plummeted by the time before May 30 or May 20th. We'd be able to pick up another, 350 whatever, and then we'd only have to go basically to the 176.82 mark or around there. It's going to be in this area to close out of our position instead of having to wait to come back up here. And you could argue that it's going to continue on down. Well, guess what? We have a plan for all of this. But we're not selling anything. Anything that you see in here right now, if this market crashes tomorrow, we're holding it. We're holding it from this point forward. Doesn't matter, win or lose. We've already made our profit on it. Whatever you see on the board here, we can lose. And guess what? We've already made it. So the worst that can happen is we come out even. But fear will keep you out of the market. But not all of these are going to go away. I can tell you that. They're going to be around for a long time. So am I. As long as I'm alive, I'm going to own these and pass them on. These accounts go nowhere. You wonder how these people continue to stay rich their entire lives? Because they understand how to manage money. You never sell anything unless you can profit from it. Otherwise, you're collecting a dividend. Lots of people say, oh, well, you can take that as a write-off. And I was like, I don't want to. I'll pay my tax. I'd rather have something that I know is paying me a dividend, If there's something that's not paying me a dividend, maybe, I have to think about it. Did it pay me in the past? Of course it did, because that's why I bought it. Stocks do stop paying dividends for one reason or another. Great example is BA. Let's take a look at them. Market's just about to close. Let's take a look at BA. Oh, BA. Okay, Boeing. Okay. Used to pay dividends. I can't remember. It was in the $10, $12 range, somewhere around there. It will pay it again at some point. If it's on my scan, I'll guarantee you I will buy it. People are scared of that, but I can guarantee you this. They will not come back with the same level of dividend. I mean, the amount will be probably much lower because this all goes back to that big issue they had with the 737 that was grounded or whatever. But I mean, this is just one example. But why not hold this sucker, right? If you don't have your life savings in it, then why sell it? You just wait for it to come back and start paying dividends. It doesn't matter what's going to happen. what's the worst that can happen? It goes away, right? So what? But if in this case, you can look at this, and because of the price, I bet you max shares is going to be in the 5 to 10 range. It just depends. We have an algorithm we go through. We look at several different things. Say, okay, well, let's just say you can only own one share. Oh, we bought it and the dividend stopped. Well, we just sit on it. Whatever the last dividend was, you've already targeted your limit where you're going to get out. So you just wait for it to either go up. If it never goes up, you just wait for it to come back and start paying dividends again. If it never pays dividends again, so what? You've got it at 236 bucks. That's not a bad deal. You're just waiting for it to make a move. If it never, let's just say it goes down and it trades at $50 for the rest of its life. You just own one share of Boeing. Anything can happen. There's so many different things that can happen, but people don't think into the future. They think, oh, well, right now, I'm afraid to lose that $200. If you're afraid to lose $200, you should be, but that's not what you should be worried about. What you should be worried about is making a dumb error and saying, hey, I'm going to put $31,000 into Boeing. If you get my point. Don't put all your money or eggs in one basket. This is why you diversify. It's not because of the reasons they tell you. They tell you, yeah, it's to protect you, but at the same time, they tell you what to go into. They want you to go into these blue chip stocks and say, hey, how about ones that pay me some friggin' money? I want to get paid. If I'm going to hold on to this thing, I want to get paid. This one's been in this account for a while. Well, no, this one hasn't. Which one am I thinking of? The AJG was bought yesterday. Yeah, bought on the 27th and sold today. So 2 days. Yeah, I can't remember which one I'm thinking about. But either way, the higher the share amounts that you see, like this one here, ARR, that's what I'm thinking about. If you look at this one, when you see something with high position count, that means it's been in this account a long time. So we've dollar cost averaged it down to a point, and it's probably been in the account a long time. So at 146, it's at 143. So we could possibly buy another 3 shares, but it still had it. I think it came up on the scan not too long ago. No, I'm positive it did, and we ended up buying some more. It's just you're not going to see it on the chart here. But what that did is it dollar cost averaged us down a little bit more, and see we're way up there. It's like we're still what 31? What's the price? 21.83 is what our average cost is. So we're at the 12.33 mark. But the whole time, if this has been in the account for 10 years at 9.7%, it's already paid this 31.23 back to us plus, right? So yeah, you're still down the negative 13.59. That's just an accounting measure. It's an unrealized loss. You don't sell this. You're making 10% on your money. Look, it's moved from 109 per year on dividends to 120. 109 to 120. Might not sound like a lot, but at 143, what are you making a month on that? 143 by 120. Yeah, per year you're making 170, 160. So just divide that 170, 160, 123, 71, 60. Well, it's kind of hard to go by this because you have this value here. But what I'm saying, 10%, right? If you're taking 10%, whatever this was 10 years ago, I don't remember. But we know it had to be a minimum of $1.20 because that's what our minimum is. But you get the idea. That's showing you 18 years to get that back. That'd be if you add that 13.59 to it as well, because you're actually in reality making about 6% off of what this price is right now. So 21.83 divided into 120. Let's see what that comes to. See what our actual say 120 divided by 21, let's go 84. Yeah, you're making 6%, right? So as you multiply that by 100, so you're making 5.5%. Okay, so 5.5% on your money is going to take you 18 years to double that value if you bought it today, right? But we bought it back whenever, and we've just kind of moved it on up. But now you're making $1.20, which is 171. Just keep subtracting from this value here. So if you've done it for 7 years, you know, it adds up over time. And eventually, it pays for itself. This is why you never sell them, because these things don't go anywhere. If it does go somewhere, you've already gotten your money back. It's a zero wash. If this market comes down, who cares? We're going to continue to collect this dividend. It's just going to keep on growing. This account has, I can't remember what the highest it's gotten to, but then it's come down, it's gone up, it's come down, it's gone up, it's come down. It's because we pull cash out, right? You pull cash out of your account. It's just something, you know, you want to keep on rolling it, that's fine. You go over to this account, and it's like we didn't take as much cash out of it. Now we get a bunch of cash sitting down there, right? So you have to have some cash sitting, waiting to be deployed. If you don't, if you're going all in, you're basically saying, well, okay, I'm just going to collect dividends on the way down. And the dividends won't be enough to help you DCA. You'll have to add money. And that's fine if you want to do it that way too. But, you know, I choose to have money sitting there waiting so that I can act fast. So sometimes it comes down, hits that, and goes right back up in the same day. It can. I just want to be ready. So that's it for today. A little bit long on that. Got on a rant getting off the bike. But we'll see what tomorrow brings. Tomorrow's the last day of the month. Should be interesting. Probably a little bit of selling going on, I would imagine. But in this market, who knows? We'll talk to you later.